Welcome back to our tax resolution series. I'm Ilionina, CPA, an enrolled agent from Boise, and the owner of Idaho Tax and Bookkeeping Services. In episode 6, we explored the basis of an offer and compromise program and how it helps individuals to settle their tax debt for less than what's owed. Today, we're focusing on how offer and compromise applies specifically to business taxes and trust fund recovery penalty, a common challenge for many business owners. So let's dive in. Of OIC for business. Businesses often face significant tax liabilities, including payroll taxes and income taxes. Here is how an offer and compromise can provide relief for business-related tax debt. Eligibility requirements. To qualify, businesses must demonstrate that paying full tax debt would cause financial hardship. This requires detailed financial statement information, including business income and expenses, assets such as equipment and inventory, and also the outstanding liabilities like loans or vendor payments. Key difference: fiduciary assessment. Before business can settle its taxes through an OIC, the IRS may need to assess the fiduciary responsible for managing the business finances to ensure accountability that helps the IRS understand the financial dynamics of business. 3 scenarios for business offer and compromise. OIC is particularly helpful for businesses who struggle with payroll tax debt, companies with declining revenues and high liabilities, businesses that have closed out but they still owe taxes. Now let's tackle the trust fund recovery penalty. This one is really big. Please stick with me. The trust fund recovery penalty kicks in when the payroll taxes withheld from employees' paychecks do not make it to the IRS. These aren't just regular taxes. They are considered trust funds because the owner keeps those in trust for the IRS as they withheld from the employees. Those taxes don't get paid. The IRS can hold individuals responsible, like business owners, payroll managers, or anyone in charge for collecting and paying those taxes. And there is a kicker. The trust fund portion becomes personal liability, separate from the business debt. Can this debt be settled? The good news is, yes, it can. You can use an offer and compromise for trust fund liabilities, but the IRS has strict requirements. You will need to prove that they're not likely to collect the full amount because there is doubt as to collectability, and show the offer is the best that you're going to get. Steps to settle the trust fund penalties. If you're handling trust fund penalties through an OIC, it's like the offer that we talked before: submit the Form 656 and the Form 433A, and for the business also it's 433B. Provide all the supporting documentations to show financial hardship, and ideally you would work with somebody like myself. This is not the time for guesswork. How to succeed? When you're dealing with a business or trust fund taxes, a few things can make or break an offer and compromise. So be honest. The IRS needs to know the full picture, so don't leave anything out because that could be deemed as lying. Check the fiduciary box. If it is a business OIC, make sure that IRS has assessed the fiduciary trust. Stay current, file all your taxes, and make all the current payments. Get help. Seriously, these cases can get complicated really fast. Having a CPA or an enrolled agent like myself in your corner can make all the difference in the world. Settling business or tax fund trust liabilities through an offer and compromise, it can feel overwhelming, but it's doable when the right strategy is implemented. I have been helping clients to tackle these issues for over 15 years, and I can tell you, having a solid plan changes everything. Thank you for hanging out with me today. If you found this helpful, make sure to like, subscribe, and hit the notification bell so you would know when the next episode is coming.